Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me as part of our Financial Markets Quality virtual conference coverage is Waqas, CEO of FTSE Russell, to discuss innovation in the global index space, ESG, and sustainable investing. Waqas, it's great to see you. Welcome to Trade Talks.
Hi, Jill. Thanks very much. Good to see you too.
What do you see as the role of the global index provider today? How is it changing?
Well, the index provider is really there as a partner for many actors in the financial markets, whether that's on the buy side, asset owners, asset managers, or on the sell side with investment banks and liquidity providers and exchanges. We work as part of that ecosystem to provide them with the underlying tools, data, analytics, indices, of course, to help them to both structure their portfolios and build portfolios with exposure to particular market segments or market themes, but also to provide them with the data and the analytics to help them to manage risk in the way that they run those portfolios on an ongoing basis. So we really work in partnership with our customers and with various actors across the whole of the financial markets ecosystem.
What are some of the most pressing issues the industry is facing today?
Well, the biggest theme, I think will come as no surprise to you and to the various listeners and viewers here, is sustainable investment. In the last 2 to 3 years, we've seen an explosion in interest and demand in the sustainable investing space. Some talk about that in terms of ESG, some talk about that in terms of climate risk exposure, but generally speaking, we've seen a huge uptick in demand from all quarters in the financial markets for more products, more data, more analytics, more tools to help them to get to grips with those themes in the way that they manage their portfolios.
Right, and in the same token, where do you see the most innovation in the index space right now? There's a lot of opportunity for that too.
Well, that demand that I'm talking about in sustainable investing is obviously driving a huge amount of innovation. We're doing a lot of that in terms of reshaping many of the indices that we've got today in wide use. We have about $16 trillion of assets under management that follow our indices as benchmarks or as underlyings in their products. But we're seeing a lot of demand to shift the exposures to be more weighted to ESG themes or to sustainable investment themes. So we're doing a lot of product development and index development in conjunction with partners and customers to come up with those solutions. But that drive and that demand is also coupled with a demand for clearer, more consistent data, more high quality data for the underlying components that go into computing those indices, and also for risk analytics that line up with those. So that's driving a lot of innovation in tech to be able to deal with huge pools of unstructured data that underlie a lot of those ESG themes. So there's two different themes. One is the kind of the infrastructure, if you like, on the technology side to help people get to grips with producing and disclosing more of that data. And then the use of that data in developing products to help in the sustainable investment themes.
So what is FTSE Russell doing specifically in this space, and what new products or analytics do you expect to come?
Well, on the index side, we have launched a whole range of indices in the ESG space and in the climate risk space. So our index business is one of the few that is able to cross the divide between equities and fixed income. We have a very full suite of indices covering all major equity markets globally, and we have a very full suite covering all fixed income markets globally. And so we've been developing a lot of solutions in the ESG and sustainable investing space in both of those asset classes. We also cover the sub-asset class of listed real estate with an ESG theme. So in the equity space, we've been doing a lot of work with customers, again, with partners, to develop specifically tuned portfolio solutions, investment solutions, with some really innovative work on climate transition. One I would highlight is the FTSE TPI Climate Transition Index. TPI stands for Transition Pathway Initiative. That's where we've worked in conjunction with the TPI to put together an index based on their analysis using our underlying data that scores companies on their readiness for a transition to a Paris Accord related economic environment. So that helps investors who are tracking that index to get a sense of which companies are really getting ready in their operations to meet the demands and the targets under the Paris Agreement. That's on the equity side. On the fixed income side, we've got our own proprietary climate risk model. We acquired a company called Beyond Ratings a couple of years ago, which is a team of real high-powered quants who are focused on building climate risk models applied to fixed income. So we have a sovereign bond climate risk model that we've used to build a sovereign bond index that's weighted and adjusted based on our own proprietary climate risk scores. And that's something that we've been able to launch as a product in the ETF space in partnership with BlackRock quite recently, specifically with exposure to European government bonds. So those are a couple of examples. We have, one example on the FTSE TPI index is something that's been used by big pension funds to structure their own portfolios and put money into mandates that are tracking that index on the equities side. Another example is one where we've got an index solution in an ETF for fixed income exposure to climate risk.
And Waqas, there's been a call for better data disclosures and consistency in the ESG space. Of course, a lot of that can be arbitrary. Do you see this improving?
I mean, there's a lot of work going on to try to get more consistency and to pursue a more standardized approach. And it's certainly improving. I think that, recent announcements from, for example, the IFRS, who are looking at producing more consistent accounting related standards around disclosure for ESG, that's encouraging. There's a lot of work going on in a number of bodies, and we're participating in a lot of consultations and working with a lot of partners. I can name SASB, who are looking at that, and obviously our work with the TPI. There's the TCFD, which is around climate-related financial disclosure. That's a global initiative that's going on. We in FTSE Russell, we're part of the London Stock Exchange group, and the London Stock Exchange is kind of leading the charge in the community of exchanges globally and co-chairing the UN Sustainable Stock Exchange Initiative to encourage stock exchanges around the world to help issuers to disclose in a more standardized way. So there are a lot of activities going on. There's a lot of coalescence of demand from the investor side. There's a lot of need and demand from the issuer side to look for solutions to be able to deal with the challenges of disclosing data along different dimensions in a more consistent way. All of that is coming together with an overlay of, a policy and regulatory push in a number of jurisdictions to make those things happen in a more consistent way. The biggest example of that is happening in the European Union, where you have the EU taxonomy, which is something that is intended to help issuers disclose along a standardized set of measures for green finance, but also is intended to help investors to avoid the pitfalls of greenwashing. So in January 2022, product providers who are offering sustainable investments or sustainability funds will have to disclose along the lines of the EU taxonomy how their fund products are actually addressing sustainability, right? Do they do what they say on the tin, so to speak? And we have helped by aligning our green revenues classification system to the EU taxonomy to help investors and product providers get to grips with those challenges. So that's something that we launched earlier this year.
Now, with the Biden administration coming into power, do you see the ESG landscape changing in the United States?
Well, by all accounts, there seems to be a much more favorable policy environment coming in. I guess we have to wait and see how that actually pans out. But, I think even outside of the policy environment, there is significant demand in the US from end investors and, product providers to meet those challenges of building sustainable portfolios and building investment products that address those themes. So, we do an annual survey of asset owners, for example, globally. We asked this year about 130 asset owners about various questions about how they are meeting the challenges of shaping their portfolios towards sustainable investment themes. And, although there's a difference in take-up and adoption of those principles and approaches between, let's say, the EU and the US, where the EU is something like 83% of EU respondents are already adopting those kind of investment processes. And in the US, it was something like 63%. So it's a little bit behind. but we saw the fastest growth rate in the US. You know, that 63% was 20% higher than it was the year before. So our perception is that whilst the policy environment might be different in different jurisdictions, the demand from the end investors is still very consistent, still very strong, and is growing very fast in the US.
And finally, Waqas, what are your thoughts around consolidation or evolution of large exchange groups moving forward?
Well, I mean, we are ourselves looking from in that context of consolidation, we're actually in the process of acquiring Refinitiv. That's subject to final regulatory approvals. That's in line with our investment thesis, our business thesis, that what is driving investments and markets globally is a greater demand for data and analytics and risk tools. You know, indices are just one expression of that. Underlying data sets, risk models, analytic calculations, and the scale and compute power to be able to deal with that across a vast array of securities and geographies is something that end investors are asking for. We are, I think, going to be uniquely positioned to be able to help customers on both the investment side as well as the issuer side, because we'll have the capabilities of a huge data platform across our our information services division, our capital markets division, and our clearing division. That's something that we see as a theme, increasing demand for data and analytics. In terms of consolidation of other exchanges, well, I can't comment on what others may be doing there, but certainly I think the push from the end investors and from issuers is for more data and analytics, and that's the reason why we're going down that strategy.
All right, appreciate the insight. Thanks for joining us on Trade Talks.
Thanks very much, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.